Let me give you a quick credit card guide that generates approvals consistently. And it's important to understand that when you actually are thinking about applying for a credit card or two credit cards for that matter, you got to have a system. You got to have a strategy. And this is what this guide will actually help you have today by actually making sure that you are actually approved even before you actually apply. Okay. The first thing I want you to do, if you want to have a credit card strategy that generates approvals consistently, you want to make sure that you choose how many cards you apply for. Do not apply for too many cards at once. That's really important. I mean, of course, everything I'm telling you to this conversation, I'm not giving you guarantees, okay? But there are ways to increase your chances of getting a yes anytime you apply for a credit card. So, number one, do not apply for too many cards at once, because what happens here is that every time you apply for a credit card, it really dings your credit score. Okay, so maybe 5 points, maybe 7 points, maybe 10 points. So if you apply for many cards at once, it doesn't look good to lenders. I mean, those credit card providers, they're thinking like, okay, you probably have a major financial problem. That's why you need so many credit. That's why you make credit cards. That's why you need so many credit cards. So it's just better to take your time to find the right card to apply for instead of wasting your time applying for cards you are unlikely to get approved for in the first place. Okay. Now, one thing I want you to really understand is that I'm not saying you should not apply for multiple credit cards, but if you want to do so, you have the possibility of spreading them out. Okay. So you want to spread out your request so that they are at least 6 months apart, 5 months, 6 months, 7 months, or even 9 months apart. That way you are able to actually control. You can control things a lot better, especially when it comes to flexibility. Number two, you want to know what's in your credit reports. If you want to actually generate credit card applications that are successful every time you apply, you want to know what's in your credit reports. Sometimes the regulatory marks may actually hamper your ability to get approved. So at least if you know in advance what's in your credit reports, at least you know how to really counter it. You know how to really mitigate it. Okay, so go to annualcreditreport.com right now if you haven't done so already. So you have a clear idea, okay, what kind of, get the latest copy of your credit report for free. I need to insist on that, for free. So you know what's in there before you apply for a credit card. If you want to really generate approvals consistently anytime you apply, please make sure that you apply for cards that fit your credit score. I know it can be very tempting to apply for a Chase premium card because everybody talks about it. But big question is, what is your credit score? Where you are at? Are you at 579? Are you at 550? Are you at 300? So if the credit card is asking for a credit score of, let's say, 750, and you are at 550, right off the bat, you know you'll never get that card anyway. Okay, so don't try to really waste your time, energy, and even your hopes trying to really apply for a card you may not get. Okay, don't and please don't listen to folks telling you on YouTube videos, hey, listen, you can still apply. They sometimes they tell you you do just implement this hack and you can qualify for the card. There's not such a thing as applying a hack to actually apply for a card successfully if you don't meet the basic definition, the basic criteria, the basic eligibility criteria that the card really has. Okay, so you want to really apply for cards that fit your credit score. One thing I want to say here is that applying for the cards that match up with your credit score gives you the best chance of approval, because statistically that's really what you can really that's what the credit card issuer thinks you can qualify for. Let me give you an example. Let's say you have a fair credit score, right? You might want to consider a card like Capital One Quicksilver One Cash Rewards credit card, which is really aimed at consumers with scores from 630 to 689. Don't try to really go to shoot above your range, so to speak. Another way to actually generate approvals consistently is to pay your bills on time. Okay, paying your bills on time actually contributes to your credit history and also can help your credit score. And that includes payments for credit cards, student loans, a mortgage, rent, and utilities. So you have a large range of possibilities. Okay, consider also setting up automatic payments, at least for the minimum payment due every single month, to avoid accidentally missing a payment and getting hit with late payment penalties. Okay, that's something that you definitely don't want to have. If you want to generate credit card approvals consistently, make sure that you watch your credit utilization. I mean, I've spoken about credit utilization in the past before, but the thing is that this year it has come big time because credit card issuers are paying attention way more to credit utilization. Like a few years ago during COVID, particularly, they were actually being flexible. They were actually being less strict on that front. But these days, credit card issuers from Chase to Wells Fargo to Truist to a PNC, whatever, they're paying attention to a credit utilization big time. Okay, and some issuers are even stricter when it comes to the amount they will look at. Before, credit card issuers were comfortable with 35%, 40%. Okay, if you have a couple of fintechs, they will even give you they will even allow you to apply with 50% credit utilization ratio. Nowadays, credit card issuers are really, really stricter. So they're going to even 25%. So they will want to look for a CUR of 25%, especially if you are going for a premium credit card. Okay. So that's like if you go for the reserve, for instance, then you have to really have a very low CUR. Now, there is actually a connected metric to credit utilization, and that's actually your DTI ratio, your debt to income ratio. Okay, so basically, you want to have the same thing. You want to make sure that you have a DTI that's very low. In terms of DTI, credit card issuers haven't really updated their criteria lately, so it's always good to have a DTI that's as low as possible. Okay, I mean, I think what I've seen works in the industry is 30 to 35%. Anything above that makes the whole process more complicated because credit card issuers are thinking that basically you may not have enough cash to repay whatever you charge on the credit card. So if you have a low DTI, that's even better. Okay, low DTI or no DTI for that matter. If no loan, no open loan, no open mortgages, that's even fine. But yeah, if you do have loans outstanding, make sure that your DTI and CUR are as low as possible. If you want to generate credit card approvals consistently, it's important to also think about your credit mix. And credit mix is important not just for credit card application. It just sends a message, it sends a signal to the credit card issuer that you are responsible with debt overall, all kinds of debts. Okay, so the credit card issuer is thinking, hey, listen, here is a borrower who hasn't put all his or her eggs in the same basket. He knows or she knows how to handle debt, all kinds of debts. Okay, because think about it. If you only knew how to handle revolving credit like credit cards or lines of credits, a lender might be a little surprised, might be not surprised. They might be a little hesitant to give you a loan. Okay, because they probably think, well, you don't know how to handle an installment loan. But if you are able to demonstrate that you have managed successfully in the last few years a mix of credit products, that can help you a big time. And by a mix of credit products, I'm just speaking about a few different kinds of cards and loans. Okay, so if you can have maybe a travel rewards credit card, you can have a cashback credit card, you can have a loan. It can be a secure loan. It can be an unsecured loan. It can be a line of credit. Just have a mix. Okay, have a mix that will help you actually instill an extra layer. Okay, an extra layer of credibility vis-a-vis the credit card issuer. Now, when you make timely payments consistently across the board, this process shows that you can handle different kinds of credit and you are more likely to be deemed a reliable applicant. Okay, that's an important element for the credit card issuer, not just in the short run, but also in the long run. And this is not even based on geography. No, this is actually applicable across all 50 states. Okay, so one thing I want to say here is that basically, if you have all kinds of debts and you are able to manage them properly, you can also increase your credit limits, because this shows the lender that you are a responsible borrower, so they can give you even larger credit line. So if you want to generate approvals consistently when you apply for a credit card, it's important to understand that going back to what I said about applying for cards that fit your credit score, if you happen to have a low score right now, let's say you have bad credit, right? And you tried an unsecured credit card, you've tried all of them, and you were unsuccessful. Well, how about just trying a secured card? Because a secured card a secured card has double benefits. Number one, the card is actually easier to qualify for, because the limit is actually your own money. So there's nothing to apply for, number one. Number two, you are able to build credit history. You can build credit real fast. There's no need to actually wait for the credit card issuer to review your application. If you have bad credit, it's just better to finance your own credit worthiness. That's how I look at it. If you get a secure card, you are basically financing your own credit worthiness. At least you are financing your path back to credit worthiness. Maybe you had poor credit, or you had no credit, but now it's time to finance your way back to credit worthiness. Okay, so that's kind of important. And the another thing you want to do here is to find a cosigner. So if you have no credit or bad credit, getting a cosigner will actually increase your likelihood of being approved. Okay, that means what? It means that someone else will be responsible for your debt if you can't make the payments. Okay, and so that's kind of cool. Another option, and I love this a lot, is having that person add you as an authorized user on their account. So, in other words, they will be primarily responsible for the debt, and you will be secondarily responsible for the debt. So another way to generate credit card approvals consistently is to actually build credit early. Don't wait don't wait when you're 25 years old or 30 years old to start thinking about building credit. Okay. So basically, if you can really build credit in your teens, for instance, maybe by being an authorized user on somebody else's card, that's kind of cool. But one thing I want to say here is that when I say build credit early, it has to do with credit history. How far back can you go, right? So that's why you do not want to close. You do never want to close other cards, especially if you have had them for a long time. Let's say a card that you have had for 20 years is not the same thing as a credit card that you've had for 10 years. Okay, so credit history really, really matters, and your credit score will be higher if you have let's say several open accounts in good standing. Okay, so that's an important element. And another way to generate credit card approvals consistently is to look at the lender. You want to pay attention to the credit card provider, the institution that you actually where you apply at. Okay, so you want to apply at your bank or credit union. I mean, wherever you bank at, whatever institution you bank at, chances are they issue credit cards too. I don't know that many banks in the country right now that don't have a credit card. I mean, they may not have a business credit card on on their records, but all banks or credit unions do have some kinds of personal credit cards. Okay, and chances are if you apply with them, you could actually qualify faster, because basically you've been with them for a while. Okay, you probably have a checking account, you probably have a savings account, you probably have a direct deposit coming into your account, and so they see the flow of cash coming into your account. So because of that, they'll be willing. The institution will be willing to actually trust you for managing your account better. Okay, and so that's kind of cool. And so one thing you also want to do is that you want to also, let's say you want to look for cars with pre-approval. So if you want to generate approvals consistently, you want to see whether or not you can have a soft pull first. That way you do not go through the process and actually risk a hard pull, and a hard pull that's really unsuccessful. In other words, your credit score goes down by a few points, but then you still do not get approved, right? So to actually avoid that, go through a soft pull process first. So I just gave you the top 10 ways to actually generate approvals consistently. Now, what should you do if your credit card application, let's say, God forbid, is denied? Because, chances are sometimes you can apply for a credit card and the whole thing is denied. I mean, you tried everything. You have the perfect credit score, quote unquote, perfect credit score. You probably have a job, and something doesn't go right. And you just really surprised. Now, the first thing you want to do is that do not panic. You want to check your credit reports. If you remember, I told you a little earlier to know what's in your credit reports, right? Sometimes you might think, well, you have the quote unquote perfect financial profile, but there is something in there. There's something in your credit reports that really cripples your application. So go back to what I said about you want to go back to annualcreditreport.com so you can see maybe what incorrect information, okay, is actually lying in your credit report. You also want to spend some time improving your credit. I mean, it's one of those things where if you are denied, there has to be a reason why you were denied in the first place. So take time to fix whatever needs to be fixed. Okay, so maybe it means that you are lowering your debt levels. You are paying your bills on time. You are adding more types of credit to your profile when you can. So we're going back to your credit mix. And so paying down debt is really important because paying down debt is going to reduce your CUR. If you remember a little earlier, I told you that a low CUR or even a low DTI is going to help you. So paying down debt is going to lower your, sorry about that. It's going to lower your DTI, but also your CUR. Okay. And one thing I want you to also remember is that when you apply for a credit card, you always want to list household income on your application, not just your own income, but also your spouses or partners. So instead of, if you're making 50 grand, think about maybe adding your wife or husband salary too. So instead of 50 grand, you have 90 grand, right? So that's going to help you in terms of application success. Okay. So that's important. Of course, I'm not telling you to lie, no, but you want to list whatever income that household members are bringing to the table. So in conclusion to this conversation, I shared with you a credit card guide that generates approvals consistently. Okay. And so everything from not applying for too many cars at once all the way to finding a co-signer, among others, can really help you big time. Thank you so much. God bless you. I will see you next time. Until then, remember, stay marvelous.